All right. Hello. Good morning, good evening, good afternoon, everyone. Hello, Adashi Marty. Welcome, welcome, my friend. I do hope you learned something. Bienvenido. Hello, hello, hello. Best part of Sunday. Love to hear it. Love to hear it. Hello, hello. How's everyone doing? Hello, Percy. Great to see you here. Hello, Naman. Hello, hello, hello. From Western Florida. Nice, nice, nice. I already have a request right here. Could a Hindi speaker who is very confident in MMC, so in the MMT concepts, please add me on Discord, Bullish Lucas. Pay attention, please, to the username right there. It's Bullish Lucas, like in the chat right there. So don't fall for any scams, please. Same for Arab speakers. All right. Thank you, Rishi. Thank you, thank you, thank you. All right. Hello, Clement from South Africa. Love to see it. Love to see it. Hello, Joseph. Hello, hello. Hello, Paul. I'm doing good. Thank you. How are you? How are you? New York. Love to see it, Jonathan. Enjoy it. Enjoy it. Costa Rica. Oi, oi, oi. Don't make me jealous. Come on. Hello, Josiah. Hello, hello, hello. How are you doing, sir? Watching this live at 11 p.m. while I'm on holiday, committed to the knowledge you provide. Love to see it. Love to see it. Very nice. Very nice. There's a few things that I want to go over today. And I mixed them up right here. And I also show on my screen. Let me see. There it is. First of all, I want to go over the third candle right there. Because we had an absolutely beautiful example of a third candle this week. And some people might already know what I'm talking about right here. But there was a beautiful example of the third candle throughout this week. And afterwards, of course, we'll dive into the forecast, etc., etc. And then afterwards, of course, we'll also dive into questions and this and that, etc., etc. But that is very interesting because we had a very interesting third candle on the dollar this week, on the weekly time frame, actually, which we'll dive into as well. Let's see, let's see. Hello, hello, hello. Welcome, everyone. Welcome, everyone. Love to hear it, MFX. Love to hear it. Dollar third candle weekly. Exactly. That's the one. That's the one, my friend. Hello, Eunice. Hello. Can your theory work in the lowest time frame? Yes. Everything is fractal, my friend. So that means everything that we do on the higher time frame can be applied to the lower time frame, etc. Of course, there are certain rules, as in a higher time frame is stronger than the lower time frame. But for example, even a third candle concept that also works on the lower time frame. Thank you. Thank you. Thank you. Thank you. I appreciate it. Thank you. I accept your greetings, Kojo. Thank you. All right. All right. Perfect. All right. Let's dive into it. Let's dive into this third candle. I have created a slide right here where I want to go over it and break it down a little bit more. And then afterwards, we'll also look at it in a real chart. So first of all, 16th of March today, for some people, it might already be the 17th. For me, at this moment in time, the 16th. The third candle right here. And by the way, for everyone who's unaware, we are live every single Sunday here, 11 a.m. New York local time. So make sure not to miss it. Okay, 16th of March. First of all, third candle. Afterwards, we're going to dive into the forecast. Right here. If we move on, then the third candle, we saw a formation similar to what we're seeing right here. We're going to look at the live chart as well and break it down through it. But I first need you to understand something else. This third candle right here, if we assume, and the reason why a third candle is quite tricky is because it has multiple options. It can consolidate. It can potentially create a retracement. It can also already continue lower. Now, when something has multiple options, it always becomes lower probability. For example, if there's multiple different scenarios that you can potentially choose from, then it's a lower probability because there's not one thing that can definitely happen, if that makes sense. So in order for us to trade a third candle, what should ideally happen? This right here, what we're seeing. This right there, an expansion right there. And especially if it's on the weekly time frame right there, then we should see a new expansion lower right there, ideally if we do want to trade it throughout that week. Why? Well, most of us, on average, I assume, are trend traders right here. Of course, that's the average. There are exceptions to that rule. There are also consolidation traders, etc., etc. But most of us, I assume, are somewhat of trend traders. So you rely on price moving from A to B, meaning that it actually makes a significant move throughout the week, throughout the month, throughout the day, etc., etc. The reason why it's quite important to understand is because a consolidating third candle, you're not going to get very far if you're a trend trader. So we ideally want that third candle to continue lower right there if we do want to trade it. Now, there's specific conditions attached to that. And what I mean by that is we create an expansion right there. So the third candle should be a new expansion, which means that we also run the PWL, which is the previous week low. In this case, can also be a previous candle low. It's on the daily time frame, etc., etc. In this case, it's a weekly candle, previous week low. Then on top of that, what happens is we create a breakaway gap right there. So if we try to trade a third candle, then you need to understand very closely that you're essentially predicting that it's going to be a breakaway gap right there. So you need to understand when a potential breakaway gap is going to form as well. So let's move on. If we again take the same candles right there, but instead we have price action like this. So we have sort of a consolidating third candle right there. Now what happens when we have a consolidating third candle? I need you to understand, and we touched a little bit on this in the fair value video that was uploaded yesterday actually. And it's fair value gaps don't get created out of thin air and don't get retraced back to out of thin air. So what I mean by that, on average, there's always going to be a reason as to why we create a retracement to a certain fair value gap. So what I mean by that, let me draw this actually, is when we create or when we continue lower right here, then we might sting into discount arrays right there. And when we sting into discount arrays, that discount array causes us to retrace back into certain fair value gaps that have been created to then continue lower from it again. This is what we call a trend. A trend essentially is where premium arrays are holding right there and discount arrays are getting disrespected. So, but the thing is, when we do sting into these discount arrays right here, so that can be a bullish fair value gap, can be a swing low, can be a bullish order block, fair value area, etc. When we sting into that, that is a bump in the road, meaning that we don't necessarily expect it to hold, but we do see a rejection from it to sting back and cause the retracement back into premium arrays to then continue lower from it again. That is important to understand because that is what we know as some of the ping pong effect, which again, we'll see it in the chart very clearly in a little bit. But right here, what we then see is we need to take into account, first of all, the resistance that we have. Then we need to see if we can sweep the previous week low. So not run the previous week low, no, sweep the previous week low right there. And then also, number 3, a lower time frame consolidation. So let's dive into the dollar, because on the dollar we had this perfect example. Let's remove everything that we have right here. Let me move myself a little bit right there. Perfect. What do we see on the dollar? We see that we had this expansion last week. After an expansion, what can happen? We can potentially create a future fair value gap. So there's a potential fair value gap, as I like to call it. And a potential fair value gap is where we're now in the third candle. So the third candle is going to form right here. And we are not sure if we do want to trade it, like we mentioned, we should want to see a breakaway gap like that. So for example, like this here on the left, where the third candle is already a new expansion right there. So we can already look to trade that third candle. But what is also a little bit difficult, arguably, is that in an ideal world, we also see somewhat of a third candle consolidation, where next week we might have a sting into it to then perfectly fine continue lower from it, if that makes sense. So that is a little bit double in that sense. So what we see right here is that we have this weekly swing low. We have the previous week low sitting right here as well. This weekly swing low is also, if you go into the monthly, it's a monthly fair value gap right there. So there is some resistance, meaning that we can potentially see us trade into it, reject from it, to then continue lower from those fair value gaps again. So that means that we can potentially see a third candle consolidation right there. Now, what do we see instead? Or what do we see? Because that right there, that resistance is not a guarantee, of course. Now, what I mean by that is that resistance is not 100% guaranteed that we're always going to reject from it. So we still have to monitor and confirm it through, first of all, are we sweeping the previous week low? Are we rejecting from those opposing periods, those resistance areas? So if we go into the 1 hour right here, then what do we see? This right here is that previous week low, and this right here is that weekly swing low as well. And what do we see? We sting back into this bearish fair value gap right here, and we struggle to create new bearish fair value gaps to continue lower from. So if you're in the MMT, you know during the Tuesday live session, we called at this moment in time, when we were sitting right there, that this is very likely to consolidate right there throughout the remainder of the week. Why? Because right here, what we see is that we struggle pushing below these lows right there. If we don't struggle, and I'll give you an example, if we don't struggle pushing below lows, look at this low right here. We simply create new bearish fair value gaps every time we come below this low right here. So we're not struggling to push below that low, but here we are. So we are potentially sweeping that low instead, since we're not creating those bearish fair value gaps right there to continue lower. So what we saw during the Tuesday live session is that we created deep retracements right there. We created deep retracements where there was no need to create deep retracements. So if you remember, and if you've been watching my videos, then you understand how this all links together, because it's essentially, and what we do in the MMT is we implement it very well. So we take an objective understanding of the concepts and we apply it to the charts, which doesn't leave any, okay, can we potentially do this? No. It's just objectively, okay, well, this is high probability to happen. This isn't. So what we see right here, and if you remember a video that I made on breakaway gaps, then you understand where breakaway gaps should form. Breakaway gaps form in context areas. This right here, from this 1 hour value gap towards this 1 hour low right there, what is that? A context area. So on the same time frame, what should happen should create breakaway gaps right there to continue lower. Did not happen. We have a suspiciously deep retracement right here, where we have a long wick at the bottom. We continue high right there, and on the next candle, it confirms it a little bit, where we have another very deep retracement. That's odd. A consolidation is, if you understand the concepts, then a consolidation is everything that is out of the ordinary. Meaning, what do we have as a rule in MMT that should happen from a fair value gap? Every fair value gap should ideally, and we assume that every fair value gap should create a new fair value gap. Is that always going to be true? No, but that's not the point. That's not the point of it. The point is that if that does not happen, it also tells you what is happening. So when I say something should happen, it should happen because it remains high probability. If it doesn't happen, then it goes on to low probability. So if we don't create a new fair value gap from this previous fair value gap, then that is out of the ordinary. When something is out of the ordinary, it should not happen. It's creating a potential consolidation. In other words, low probability price action. So right here, when we continue lower right there and we struggle to continue lower, it's a perfect sign of a potential consolidation. So this right here is for us a big sign, and early on, that we are consolidating right here. Now, there's some people, and I was one of them, I used to be one of them, that would say, okay, well, Arjo, you say then we're not very likely to continue lower, we can potentially consolidate right there. Well, why can't we just look to target higher right here? So look at these bullish fair value gaps that we can continue higher from right there. In other words, can we look to counter trend trade? I need you to understand something very clearly. People think that the market moves something as the following. So let's say we are bearish and we have perfect stings into bearish fair value gaps right there to continue lower. Then we continue lower like that. Then we create right here a higher time frame bearish fair value gap. We discussed this also in the previous, in yesterday's video actually. We have this higher time frame bearish fair value gap that we can potentially continue lower from. Now people think that the market works something like this. So that you can potentially look right here at a perfect fair value gap to continue higher from, perfect fair value gap, perfect fair value gap, to trade back into that fair value gap to then again continue lower. In other words, people tend to think that on both sides of the market just has perfect stings into fair value gaps, a perfect delivery to continue higher or to continue lower. That's not how the market works, because that at its core can't be true. You can't have one side of the market that has perfect stings into the fair value gaps, and then on the other side of the market, you also have that. No, one side of the market needs to be sacrificed for the other side to have a nice delivery. Let me explain that a little bit more in depth. Why is that? Because of momentum. And this is why I emphasize so much on the fact on momentum in the market in the fair value gap secrets video. Why? Because when we are going to continue lower, then what is a fact? That we have a bearish trend. So that means we might be, let's assume that we are 80% bearish again and 20% bullish. So the 20% is forcing a retracement back into a high time fair value gap to then continue lower from it again. As in, right there, the momentum is not in your favor to trade a bullish counter trend trade right there. So what will you see when you try to trade counter trend? You won't see perfect stings into fair value gaps right there. No, you will see price struggling right there. So for example, we have this fair value gap right there. What is out of the ordinary? Out of the ordinary is an ugly two-candle rejection. Why? Because the ordinary is a good two-candle rejection. So the ordinary is that you'll have first candle can potentially be a rejection, which in this case is arguably the case right there as well. First candle is a rejection. Second candle can follow through right there. Create a new fair value gap as fast as possible. Again, these are guidelines that should happen. And if it doesn't happen, it tells you something. So right here, when we don't have that, then right there, we get an ugly two-candle rejection. And we struggle to create these bullish fair value gaps. Why? Because yes, we can still continue higher, but I need you to understand very, very important. People, and especially I see this sometimes on social media, people say, the drawn liquidity is the king. Bias is the king, as in that's the holy grail, drawn liquidity. So if you know where price is going, then that's everything that you need. If you're an analyst, sure, if you work for Bloomberg, if you work for Yahoo Finance, and you can make a nice blog post about saying, well, I think the dollar is going to trade back to that level, perfectly fine. That's all you need, indeed, and you are completely correct. If you're actually a trader, that's not all you need. That's only the first step. Why? Because you can get the drawn liquidity correctly. You can know that we are going to trade towards that high. And we had a good suspicion that we are going to trade towards that high right there. And well, frankly, that was not the difficult part. But if you are going to take a couple of losses before you take a winner right there towards that drawn liquidity right there, then mathematically you are unprofitable. Why? Because if, let's say, you have as a standard, for I speak for myself, a lot of people in MMT, you have 1 to 2 RR as your standard take profit right there. Then you can't, well, you can, but you can't take 2 losses before you take the next winner, because then you're just going to be break even at all that time. So it's not only about seeing clearly what the target is, it's also seeing if the price delivery is worth it to risk capital on. Because if it's not worth it, you might take a couple of losses before you take the next winner. And if you take 3 losses before you take the next winner, then everyone can catch a winner. But not everyone can stay out of the market to avoid certain losses before they take the next winner. And that is at its definition what is a profitable trader. And let me repeat that as well. So what happens is even unprofitable traders, they can take winners. It's not the difficult part of trading, because every once in a while you can take a winner. The difficult part of trading is knowing when to take the next winner. So let's say right here, you have let's say the +2 right there, the +2 right there. Then the difficult part is not taking a -1, -1, -1, -1 right there, and constantly trying to execute in low probability conditions to then take a +2. No, the profitable traders might take 1 -1 right there before they take the next winner, or nothing at all right there, because they know what to exactly wait for. And that is the difference. That is very important to understand. So right here, this counter trend move is not something you necessarily want to be a part of, because it's going to be difficult, struggling price action right there. Very important to understand. That leaves us and leads us to next week. So what can we expect next week? Okay, let's see what we have. We have, of course, a weekly fair value gap sitting right here. Now, this weekly fair value gap is what we can potentially continue lower from if we do, of course, want to continue lower. And that does look quite interesting. Again, let me first also, before I forget, let me dive into the economic calendar right here. This is the economic calendar for next week. Does overall look quite interesting. The only thing that is you should take into account is FOMC statement right there on Wednesday as well. It's FOMC statement, so it's a big 3 news event. It's not meeting minutes. So FOMC statement is a little bit tricky. So around that, for example, on Tuesday, on Wednesday, beginning of Wednesday, ahead of 2 p.m., take care. Be a little bit more careful right there. Afterwards, Thursday and Friday also look interesting. Now, to me, Monday right there, which is a little bit out of the FOMC statement territory, is also still quite interesting because we have retail sales right there, some red folder US dollar news, which does look quite interesting to me right there. So, with that being said, let's see what we have. We have this weekly fair value gap that we can continue lower from. Now, I also need you to understand that if we do retrace back into that weekly fair value gap, at this moment in time, we are respecting a bullish monthly fair value gap. So I want you to see this from an argument standpoint. If we take the probability indicator that we have right here, then the probability indicator right here, this is based, and actually my camera is in front of it, sorry, it's a little bit silly, right there. There you see it in top right. Then the probability indicator is essentially what we use, or well, what we use in MMT. Again, we don't necessarily use indicators. It's just to shorten the learning curve, to see what you're looking at, for example. This is how I can explain things quite clearly, making use of something objective like that. So what I need you to understand in this case is that the probability indicator is based on sign language, is based on signs, so arguments that we talk about in a lot of videos. So what are arguments? Arguments are the concepts that we have. So for example, whilst we are wicking this monthly fair value gap right there, that's a bullish argument that we potentially have, meaning that we can potentially continue higher. It creates different probabilities right there. And from that, we can then calculate a probability percentage based on the time frames that we have. So right here, whilst we are trading back into this weekly fair value gap to potentially continue lower from, I need you to understand, if we are going to do that, at that moment in time, we are also respecting a bullish monthly fair value gap. That means simply that we have a bullish argument in place right there. So in an ideal world, we first wait until we continue lower from the weekly fair value gap, take away the bullish argument right there to then continue lower. Because what happens then we only have bearish arguments to deal with. And when you only have arguments for one side of the market, what is that? That's high probability. Remember in the previous video, or the video yesterday on the fair value gap secrets, I talked about sitting in a courtroom. So if you're in a courtroom, essentially imagine you're objectively looking at the concepts and they create certain arguments in the market. And if you can read those arguments right there, you can understand objectively what the probability is in the market. That's quite important. So right here, if we do retrace back into this weekly fair value gap, we are simultaneously, so at the same time, respecting a bullish monthly fair value gap whilst retracing back into it. So that's not ideal, because then we have a bullish argument and also a bearish argument right there. That's not ideal because one side is not winning. So right here, ideally we take away this bullish argument to then continue lower, which in an ideal world is what happens when we take out this low right there. And that gives us quite a clear path to now continue lower towards these lower fair value gaps right there as well. This will also be shown if we do get the proper confirmation right here already, right there, then it will be shown through, of course, order flow, for example, on the lower time frame right here, sweeping these highs. Order flow right there, early signs that we do want to take out this low right there, disrespect the bullish monthly fair value gap and take away that argument. All right, so it's a full, it's a whole mouthful right there on the dollar. But overall, I am currently, as of now, I would be bearish, but I do want to be aware that we are respecting at this moment in time a bullish monthly value gap. It doesn't necessarily matter if you expect higher prices from it. Resistance right there, as long as we are respecting resistance, it's still disturbance in price. So it's disrupting our potential opportunity to take a trade right there. And that's important to understand. Okay, Russell right here. Let's see what we have for the indices. On the indices, we also have a few weekly fair value gaps right there. It does seem to me like a quite an interesting drawn liquidity. This is perfect, by the way. In the MMT, we have something. In the MMT, we go. It's so funny because I need to clarify this a little bit more. But in the MMT, things are so much more in depth, so much more objective, so much more implemented, if that makes sense. So there's actionable steps to certain things. And one thing that we have, for example, and the reason why I'm saying this is because in the MMT, we have something that's called the finishing context theory. So the way the MMT works essentially is I trade myself. So what that means is I also come to certain discoveries in price action that I share with the MMT, if that makes sense. So you'll see in the MMT, I have deep work sessions. I don't take concepts out of thin air all of a sudden and introduce them to YouTube, whatever. No. They're based on experience. They're based on deep work sessions that I share with the MMT. So these concepts are sort of getting developed in front of the MMT. That's very, very interesting in my opinion. And one of those concepts is a finishing context theory. Now, this concept is not new or anything like that. This is quite old. I believe the deep work session was done somewhere in 2024 even. But right here, what that is that when you have context on one time frame, so in this case on the daily time frame right here, you have context from this daily fair value gap towards this swing low right there, because that's the context area, right? We understand that. But at the same time, we are also looking at a potential weekly fair value gap right there. So what do we do? And that was a question that I had. What do we do at that moment in time? Do we wait for the weekly fair value gap to be created to then continue lower from it? Or can we still trade the daily right there to already continue lower? Well, this is what leads to the finishing context theory. It says in the name. When you have on one time frame above, so here on the weekly, a fair value gap that's getting created, then yes, it is quite likely, unless it's becoming a breakaway gap, that we do and we might want to trade back into it. Now, if at the same time you have context on a time frame below, so in this case, the daily time frame, then what you'll see is that the daily time frame will finish the context before trading back into those weekly fair value gaps. So I need you to understand something else. This is going to turn into a 24-hour live stream right here. But no. Okay, so I need you to understand something else. And that is, context areas are key. And the reason why they are so extremely important and key is because of the fact when we trade into a daily fair value gap right there, I recently sent out a newsletter on this. And that is the fact that even if we want to continue higher, then in some cases, we first still need to continue lower to then continue higher. This is where context areas are important. Because when price wants to continue higher right here, it's quite unlikely that price doesn't move in straight lines. So price doesn't move in straight lines up, straight lines down. Otherwise, we could just buy or sell and it would be quite easy actually. But that's not the case. Price moves up sometimes by going lower first to then continue higher. Why? Because it needs liquidity. So right here, this context low, this context target is liquidity in the form of that swing low. So the reason why I also mentioned, if you want to take a trade within the context area right there, then ideally make sure that you have the 1 to 2 RR within the context area. So before reaching this low. Why? Because after reaching this low, it becomes low probability. Why? Because at this moment in time, so everything that you see here before it, before reaching this low, there's arguably only one option that we can do. And that is reach this low right here. Why? Because even if we are going to continue higher, we're going to need that liquidity right there to sweep it to continue higher from it right there. If we are going to continue lower, well, then we're going to reach this target anyway right there, those lows. So whatever we do at that moment in time, there's one clear thing that we are going to do. And that is that we are going to reach this low right there. Even if we are going to continue higher because we need to sweep it for liquidity purposes to then continue higher from it. So after reaching that low, now one option turns into 3 options. So remember at the beginning of this live stream, I mentioned the more options you have in price action, the lower probability it is. So the more things that you can potentially choose from or that can potentially happen in price, that's lower probability. When you have clear one-sided arguments and there's only really one thing that according to you can happen in the market, that is high probability. So when we reach this low right here, well, now we can sweep this low potentially to continue higher. We can potentially consolidate. We can potentially run it to continue lower instead. So that turns one option into 3 options. So that's lower probability right there. So what we end up doing is this also turns into a fair value area, of course, right here. And when this turns into a fair value area, then if we do want to continue lower, we offer fair value right here. Try to push lower from it right there after offering fair value. Fail to do so, take out the rejection right there, run the rejection high. And instead, we start to continue higher towards the fair value area highs right there. So if it's not offering fair value, then what are we doing? We are seeking liquidity. So right here, this is then the finishing context theory, where we still reach the context low, use the context low as liquidity to sweep it, to target not only these highs, but also potentially the fair value gap that we have created above right there, to then potentially continue lower. So more of the story, where do I think price is going? And it's a little bit deeper than just, again, I need you to understand, our goal of the MMT is to create self-sufficient traders. Same as on YouTube. Our goal is always to strive towards being self-sufficient. So you don't need me, you don't need anyone to make a profit in the market, if that makes sense. So I like to explain more so why I'm looking at things instead of just saying, oh, ES is going higher right there, because then I might just give you signals and I can make a lot of money from that as well, signals, but it doesn't benefit anyone and just going to make me feel like shit because I just feel like I'm taking advantage of people. Anyway, right here, I think ES at this moment in time is going to continue higher. First of all, towards this target right there. Afterwards, we can also look at the weekly value gap right there. That does look quite interesting to me. I do like it. Okay, on NASDAQ right here, quite similar overall. And I just like to base my opinion on what is ES potentially going to do and then just look at NASDAQ as well and essentially do something similar. So right there, the weekly value gap right there, also quite an interesting target to potentially trade towards. See. And first, of course, this high right there that we have. All right, YM. Let's see what we have. Not that interesting. So NASDAQ and ES both are a little bit stronger than what we see on YM and Russell, for example. So I would prefer ES and NASDAQ right there. All right, DAX. DAX is coming from an all-time high. And to me at this moment in time, not necessarily that interesting. We have built a lot of liquidity right there as well for the weekly fair value gap. But again, understanding the momentum story. When we are coming from an all-time high, it's better to start looking for slight reasons as to why we might start to continue higher towards an all-time high again, instead of trying to force and call it top and try to force a retracement right there. We'll have an example of gold a little bit later as well. But, so ideally, I would just simply like to wait. And if anything, I would like to look at longs and target again a new all-time high right there already. All right. And this goes back as well to understanding that momentum, right? What we talk about in the video, for example, the FEG secrets, is that if we are going higher, then what is the one thing that is guaranteed? That we are going to continue higher. So what is the one thing that's not guaranteed? Retracements in the market. So if you are trading back into a fair value gap right there, that's low probability. Why? Because you're trading against the overall momentum of the market. This is not guaranteed. But this right here, this move higher is guaranteed. So if we do sting back into this fair value gap and now we continue higher, that's super high probability. But if we already continue higher right here without stinging back into the fair value gap, then so be it. But this right here, the higher prices is high probability. Understand that at its core. Okay, so if the dollar is going to continue lower, what can we expect from Australian dollar, US dollar, Euro US dollar, GU, and New Zealand dollar, US dollar? Essentially saying, what can we expect from the pairs that have USD in the last part of the ticker name right there? So what can we expect? Well, we can expect these pairs right here to move higher, but can we expect all of them to move higher at the same pace? Absolutely not. Australian dollar, US dollar has not been interesting to us for a long time. Why? Because Australian dollar is arguably just as weak as the US dollar. So when two weak currencies are fighting each other to get a movement in the pair right there, it's not great. Because one currency needs to be extremely weak in order for the other currency, or in order to be a lot weaker than the other currency right there. So that's when you'll get a move in Australian dollar, US dollar, for example. It's not ideal. It's not what you want. So you want to have one currency like Euro, for example, that's at this moment in time a lot stronger than US dollar. Same for GU right there. So if we take a look at GU and Euro, then what do we have? We have very nicely weekly fair value gaps that we can potentially also continue higher from right there. Understand the dollar story. Don't go into that weekly fair value gap and just think, oh, it's a weekly fair value gap, perfect. Well, fair value gaps equals that we must do that, right? So we can easily look for a 1 minute entry confirmation and continue higher. No, understand the story that we talked about the dollar right here. So the monthly right there, if we're still respecting this monthly fair value gap, have an aggressive sting back into this weekly fair value gap, you might want to stay on the sidelines until we have more confirmation to continue lower. Okay, so overall EU, GU right here, the most interesting in my opinion, because of that strength and weakness perspective. So Australian dollar, US dollar, New Zealand dollar, US dollar, not that interesting to me. Not that interesting to me. Same for US dollar, Canadian dollar, also not that interesting. So what you'll see is Canadian dollar is equally as weak as the US dollar. So that means that both are essentially just bad at this moment in time. So when both are equally as weak, then again, look at it from a how do you call that game? I don't know the English word for it, but it's a tug pool or something like that. The tug war, I believe, where two teams pull on one rope and two teams try to pull on one rope and see which team is stronger, essentially. So by pulling the rope. Now, what happens in price when both currencies are equally as strong or equally as weak, the rope doesn't move anywhere. It stays in the middle. But when one currency is stronger than the other, that causes a trend where the rope is moving because one currency is stronger than the other. That's what we're seeing on EU and GU. US dollar, Canadian dollar, that's not what we're seeing right here. So this to me, not that interesting, more prone to also then consolidate. Important to understand. Now, US dollar CHF is quite interesting to me. I do quite like this. We have this weekly fair value gap that we can potentially continue lower from as well. Monthly fair value gap is target. Only thing is that to me, US dollar CHF does seem a little bit stronger than some other pairs. And the reason why is because this third candle is not an aggressive third candle, but it's a little bit more aggressive than, for example, on an EU, if we compare to this down candle right there, which is not a down candle even. So that is quite important to understand. So I prefer an EU or GU right there. Then next, US dollar CHF. US dollar JPY is all right, but we're running into some resistance right there, which US dollar JPY at this moment in time is quite struggling with as well. So this, and also understand, if people were looking at this daily fair value gap right there on US dollar JPY and US dollar CHF right here, this daily fair value gap to potentially continue lower from, we broke this down just now with understanding the dollar first of all, and also in the MMT. That's not interesting. It's not interesting. Just, again, there's a little bit more nuances to a fair value gap than just being a fair value gap, if that makes sense. Okay, US dollar JPY also arguably all right to continue lower, but I would like to wait for a little bit more confirmation right here. So the main three that I would pay attention to is EU, GU, and US dollar CHF right there. Gold, a very interesting price action as well. So right here. At the beginning of the week, and building on to the understanding that we had last week, we understand this is very likely to reach that all-time high right there, continue higher again. Again, like we just mentioned, is a draw liquidity alone? Is a draw liquidity alone enough? Is it key? Yes, it's key, but you also need to understand how we're going to deliver there. So we talked about an area of opportunity in the MMT. And what is an area of opportunity? An area of opportunity is an area where price will essentially move quite easily to a certain target. This right here was our area of opportunity right here, which was a beautiful, essentially. So throughout the MMT or throughout the week in MMT, I mentioned to everyone, if I'm looking to get involved, I would like to get involved in this area right here, not earlier. Well, either you're going to get involved right here, but not in the middle right there. The middle is quite dangerous. Why? Because the middle right there is sweeping lows to return back to the 50% of a potential consolidation. So at this moment in time, we are sweeping this low at the beginning of the week. We overtake this 4-hour value gap, which gave some interesting opportunities, which MMT members capitalized on right there to continue higher. But after we reach this right here, where we're at 50% of the consolidation. This right here is where you want to be careful. Why? Because we are at 50% of the consolidation, which means that is exactly where we are very likely to consolidate. So again, understanding the story I just mentioned, where having a draw on liquidity alone is not enough. You also need to avoid losses before you take the next winner. That's the continuous goal. So I understand that at this moment in time, it's low probability for me to look for an entry, even though I know very clearly what the draw on liquidity is. So even though I know we are very likely to continue higher, I still want to wait. Why? Well, just an example right here. But let's say if you were to take every single bullish 50-minute fair value gap that we had right here. And here you might have a break even or a slight winner right there. And here you might take a loss right there. Now, well, then afterwards, I'm not going to bother and mark out every single one. Afterwards, you have this one. Afterwards, you have this one. Afterwards, you have these ones where we don't even have a sting back into. In other words, you would have taken quite a few losses, hopefully some break-evens right there instead of losses before you take the next winner. So the draw on liquidity is not key. No, the price action itself right there also needs to align. So how is the delivery? So afterwards, what do we wait for? Well, here on the 1 hour, we create this 1 hour fair value gap right there. This was, we looked at this during the Thursday live session. The timing was very nice. And afterwards, what do we see? We continue higher very nicely from this 1 hour fair value gap right there with a nice confirmation to continue higher right there to have a no resistance run towards the all-time high right there. Absolutely beautiful. Beautiful price action. But anyway, what can we now expect from gold? All-time highs. I don't like all-time highs. I'm not good at trading all-time highs. Why? I can't get any accuracy from the left right there. So for me, it feels like we're trading a little bit in the middle of nowhere. And all-time highs, the two things in trading that are quite dangerous is the following. You're either going to try to call a top in a market, so you're going to go against the trend, or you're going to try to chase price. Both those things lead to a lot of losses, which is not ideal. So what I like to wait for on gold, for example, is simply said a deeper retracement. And when we get this deeper retracement back into, for example, this fair value area, then we have towards the left, again, an easy target to work with and to target right there. So that's personally what I would be waiting for. But overall, gold, buy. Longs. All right, silver, not that interesting to me. I would also advise look at gold and not silver. Why? Again, the currency strength. Well, the metal strength in this case. Because gold is just stronger than silver. So gold has an easier path to continue higher, where silver might have stings into fair value gaps as well, but might struggle a lot more. So do yourself a favor, make it yourself quite easy, trade gold instead. All right, Bitcoin. Interesting price action here, Bitcoin, because I think we're only a few runs away from reaching an all-time high. And the reason why I say that is because, well, let's break this down fully. What do we see here? We see this sweep of that high, which causes this fair value area right there to become seeking liquidity in the form of this low right here, which leads me to think we might want to target this fair value area right here at 73,000 right there. Okay. Then afterwards, what we see, we have these deep aggressive retracements, some consolidations, typical Bitcoin. That's all right. Eventually, we do still continue lower right there. Now we are battling between a sweep right here. So remember how I said on dollar, you have the bullish argument and a bearish argument. Here we also have a bullish argument in place, which is this potential sweep right there. And we have a bearish argument in place where we have a bearish fair value gap right there. Both arguments on both sides, that leads to consolidating price action. So 50-50 price action. So what we see right here is if we do want to take out this fair value gap, we should run this high right here. And if we run this high, then we can start looking at somewhat of a dominoes effect where we have this high, but not only that high that we can target, potentially also an all-time high right there. So that's why I'm saying we're arguably one run away from a potential all-time high again. And that is where this high comes in. That high is very important because as long as we are sweeping that high right there, and as long as we keep respecting these premium rates, I do still think we can continue lower. But if, let's say, we do take out these highs and we start to create bullish fair value gaps right here above these highs, then I think we might be in for a new all-time high again. So Right here, that is quite important to understand. And at this moment in time, that's still waiting as well until either of those things happen. So either we continue lower right here, get more information, or continue higher, take and run those highs right there, and then we can potentially continue higher as well. So I would like to wait right there. But it's interesting. It's very interesting. Crude oil, just one big consolidation right here, and this is not necessarily that interesting to me. We have a weekly fair value gap that we can potentially work with. Let me remove some things right here. A weekly fair value gap that we can potentially work with. It's not necessarily that interesting right here, in my opinion. I would just like to wait until it clears up a little bit. So in the short term, there are some interesting moves. For example, what we saw last week is we saw this, or was it the higher one? I'm not too sure. Let's see. No, it was this one. We saw this fair value area on the 4 hour getting traded back into. On the 1 hour, we see we have the 2 candle rejection right here. The 2 candle rejection, first candle is a rejection, second candle should follow through. Very similar to the dollar, what we saw actually a week earlier. Then right here, we have this low that gets run. And on the 50-minute, you had this 50-minute fair value gap right there. That was quite an interesting setup to continue lower. But you see, every time we reach certain target, crude oil aggressively reverses right there. So that's something to take into account. It's just a characteristic of a consolidation as well. Bank Nifty overall can simply continue lower right here. So for example, daily fair value gaps right there to continue lower from. Look at lower prices right there. That's what I would be looking at right there. All right. What a life. I need some water. Hello, hello, hello. No worries, Rumples. No worries, no worries. Welcome. Welcome, Jovel. I hope I pronounced that correctly. Exactly the 1 hour value up. Nice. Nice, 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 nice. Very nice. Oh, I need a breather. I need to breathe. I'm talking too much. Yeah, the MMT indicator is, well, at this moment in time, it's only for Masterclass. Ready to learn. Love to see it. Love to see it. This live was packed with information. So feel free to watch it again and again and again, because I arguably think I would like to make the videos resemble a little bit the live streams, because I think the live streams arguably are more value packed than the videos. Quite interestingly, in my opinion. Did not regretting watching this live at 11 p.m. during my holiday. Love to hear it, my friend. I'm happy I didn't disappoint. I'm happy to hear that. Thank you. Appreciate you. Very happy as an MMT member. Love to hear it, my friend. Love to hear it. Nice, Andrea. Nice, 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 nice. That's lovely. That's lovely. Very nice. Is this recorded? Yes, every live is recorded. If you go to my channel, you'll see a section where it's videos, posts, or something short. And also lives. It's in there. It's in there. Yep. I want to join a masterclass. How to contact you? You can go to the website. There's already quite some information right there. And then next to that, you can also send us an email. If you have any questions, again, always, and I mean regarding anything, always feel free to reach out to info@tradingmmt.com. That's where, if you reach out to this address, that's where you'll know nothing crazy happens. So nothing, if you, for example, have a suspicion that you're talking to a scammer in the Discord, whatever it might be, reach out to this email right here. To this email right here. It can also be info@ario.io right there. That's also our email address right there, but only these two. Only these two. And feel free to reach out. Feel free to reach out to us. Let's see. No, it's always quite funny to me, and this is nothing, no disrespect or nothing personal, but it's always quite funny to me that there's so many people coming into this chat just asking about these random concepts that I've never heard of in my life. Like, do you trade this? Do you trade that? Listen, if I were to trade it, you would have seen it on my YouTube. If I don't, then well, there's also a reason for that. And I think in general, people need to understand what we stand for specifically as well is we take a lot of different concepts. So I have studied a lot of different concepts, essentially forming them into one singular trading plan where you don't need to pay attention to all these different concepts to understand what's going on. If that makes sense. So I think that's quite important to understand. I didn't take any trade last week. I didn't take any trade this last week. And that's also due to the fact that for the crosses, we didn't have enough news to my liking. So the crosses were not volatile enough, in my opinion. I didn't like it. And for the dollar, we had a tricky third candle right there. So didn't do anything last week. I need advice, brother. I'm keep getting losses. Even I'm 100% sure I follow my rules. This issue happened to me at the last 30 days. Not even a single take profit trade. 5% drawdown. English is not my first language. No worries, my friend. English is also not my first language. As long as we can understand each other, we can get to the point. But what I think is important to understand, I don't necessarily have any answers as to why you take losses. So I think all the answers as to why people take winners, why they take losses, all the answers are in a certain journal. And if you journal and see and go through the previous trades that you took and see why you took certain loss, etc., I'm sure if you send the journal over to us, even to our email or whatsoever, we can see where it's going wrong. But without a journal, I can't specifically tell you what's exactly going on, if that makes sense. So I would highly advise, for everyone who is not doing that, journal is very important, especially if you do need to improve or see where things went wrong. We need, also in MT, we need to see a journal. Otherwise, we can't just simply say, hey, well, have you tried trading these for value gaps? It helps a lot to first see a journal. If that makes sense. What Notion template link are you looking for, my friend? Which Notion are you looking for? What kind of Notion? Look at what happened. Look at what happened since February, where things have gone worse. See what's the difference. All trading is essentially you go into the market, you start losing essentially, and as long as you journal those losses, you're going to be perfectly fine. Because if you journal the losses, then you want to take the winners, you want to take the losses, and you want to see, well, what is the key difference between, or what are the similarities between the losses? What are the similarities between the winners? And what are the difference between the winners and the losses? And that's essentially going to give you some evidence or conclusive ideas of which trades work, which trades don't work, essentially. This is how you get to, for example, hey, if a third candle is aggressive against me, and this is not what I want to trade, so that makes it low probability. That makes sense. Love to hear it, Chris. Love to hear it. You use this concept in live trading. It's perfect. Just my proper time and implementation is nice. And I think implementation is key. Implementation is key. Very important to understand. A to Z guide intro video Notion template. Ooh, I would have to see. Can you feel free to send an email to, again, info@tradingmmt.com, and we can take a look. It's a long time ago, so I think it might not work anymore. The A to Z guide, the Notion. It's a long time ago. It's an interesting one. Mini. It's an interesting one. It's a good observation. Your best 3 advice to become profitable in 2024. My first advice would be set your calendar to 2025. You're too late. Next to that, it's a silly joke, sorry. But next to that, I would say what I think is very important to understand is, number one, you need something that resonates with you. So find the concept that resonates with you. And don't just say it's MMT as a whole. No, say fair value gap, or specifically fair value area, or the way you explain that third candle, for example, that really resonates with me, or it's candle signs, etc. find specifically the concept that resonates with you within all the MMT concepts that we have. Then next to that, what I would advise is turn that into a process right there. When you turn that into a process, a very simple process, so just using the foundational levels right there, very simple process. Then next to that is trade it. Trade it. And not financial advice. Not financial advice. Let me make that very clear. But I think you should be trading live as soon as possible. And the reason why is because you're going to endure pain. You're going to go through pain as well. But that's exactly what you sort of need to improve from it as well. Humans are designed to learn from pain, to run away from it. So what happens is that when you take a trade and you constantly take losses, humans are designed to overcome those losses. It's in your human nature. So make use of it by trading live as soon as possible. Backtesting, with all due respect, it's not the shortest path to profitability, and it's not great in my opinion. It doesn't reflect live trading whatsoever. Same with demo trading. I can see somewhat, yes, I can find myself in it a little bit, but even that I don't agree with it overall. You just need to live trade. If you want to swim, you need to jump into the water. That's it. You can learn theory from a book, but you just need to jump into the water. Now, but when you start trading, I need you to understand you're most likely going to lose quite a lot. You're going to lose, but that's okay. That's good. You need to lose in order to improve. You can't know what you need to improve on if you're not losing, if there's not something to learn from. So when you start trading, have a journal next to it and understand right there that every time you take a loss or you take a winner, see and observe what happened right there. How can I improve? And that essentially, once you start filtering out the losses, that's when you get to profitability right there. And that can be done, in my opinion, within a year as well. If you have the right guidance, I think that's important. The probability indicator right here, by the way, this is Masterclass. This is only for the Masterclass right there. It's the MMT indicator. The breakaway gaps, this one right here, this one is free. So this one everyone can access. Let me see, let me show you. Right here. So this is one is only for MMT Masterclass members. And this one, let's see, this one right here, that one is free. What happens if 80 or 90% of traders become profitable? What happens to the market then? It will never happen. It will never happen. That will never happen. And there's some reasons why that will never happen. Is because the majority of the people just simply don't understand what it takes to be a profitable trader. Next to that, even if they know what it takes, they can't execute it well enough. So it will simply never happen. And well, let me explain it a little bit more clearly. So even if I give you a full top-down trading plan, you won't be able to make it work. And the reason why I say that is because there's a lot more going into it. There's experience factors going in. So it's, if I give you my exact trading plan, you're not going to be profitable with it. You're going to take a lot of losses. Why? Because you don't have the experience that I have. You don't have the same psychology that I have. So there's a lot of different factors going into that as well. And in general, there's never going to be a moment in time where 80 or 90% of all traders are going to be profitable. It's just not going to happen. It's not going to happen. I can sit here and try to be the good guy and say, we can make that happen. No, we can't. We can't. Because even if you provide really good education, there's still going to be people that mess up in their psychology, can't overtake their psychology. Still going to be people that don't take the action, etc., that's needed to take. So it's that's just what it is. It's just what it is. It's Darwinism. It's natural selection, I believe, to a certain degree as well. Let's see. But I never lost, Ario. You're going to lose. You're going to lose. Everyone is going to lose sooner or later. you're not going to be a good trader is not about not losing. A good trader is knowing how to take those losses and eventually also, again, turn them into winners, if that makes sense. So what I mean by that is, don't be ashamed. Everyone loses. Trading is about losing. Trading is about an edge. An edge is not something that happens 100% of the time. An edge is something that maybe has a 70, 60, 50% win rate. So you're going to lose sooner or later. But there's nothing to be ashamed of. It's not a bad thing. It's normal. It's normal. Striving for, I'm not sure if this is the right word, but striving for 100% win rate is just going to be your downfall. Likewise, Mihai. Great to see you here. Hello, Sean. Great to see you here as well. Sean, you have been here for such an incredible amount of time. That's insane. Absolutely insane. Lovely to still see you here. Nice. Yes, Eunice. We are, well, I'm not sure if it's going to be a 4-month masterclass this year, but we are going to have a 2025 module in the MMT. Yep. Yeah. I'm not exactly sure when, but we're going to have it. We're going to have it. Yes, yes, yes. For sure. Yes, correct. Wizard. Yeah. Token rejection also applies to every PD array. Every PD array. Yeah. How do you calculate position size for futures or indices? Well, if I trade futures, then it's usually through TradingView. And if you do it through TradingView, when you have the orders thing, you can just select the position size that you have. So it's actually quite easy. So for example, I don't have anything connected right now. But if you do like this and you go to create limit order, I believe. Oh yeah, create limit order. Then it pops up so on the right side. It pops up or something. Let me see if I can do it with paper trading. Let's see if it works on... It works the same, by the way, on the indices. I'm going to show you Bitcoin right here, but it works the same. So this pops up right here. And when this pops up, here you can have... this is, I believe. Yeah, this is it, I believe. And then you can risk, let's say 1% right there, I believe, or not. Yeah, I believe it is. Somewhere there. I'm not too familiar with it, so sorry if this is a very vague answer. But I believe that's it. This right here. I usually just trade through MT4 or MT5 or C-Trader. Have you ever struggled to be patient for the right conditions? 100%. I've been through. I think universally every trader goes through. Of course, there are certain like some traders go through it worse than others, but I think universally every single trader goes through the same things. So everything that I talk about, I've also been through. What I talk about in the fair value gap video, I've also been in the moment where I trade towards fair value gap, not from it, etc. But that allows me to learn. And I think what you learn from not or struggling to be patient for the right conditions is also understanding from my experience. I didn't know what the right conditions were. So you can wait and struggle to wait for the right conditions. But if you don't know what the right conditions are, then you don't know what you're waiting for, if that makes sense. So that is also, I think, very important. For example, when you take an early entry that you shouldn't have taken and you know it's quite early, then a lot of times people don't actually know what they're waiting for, what the entry actually is. And so the way I see it is problems in trading come through symptoms. So what I mean by that is a symptom of struggling to wait for the right conditions. That is a symptom. It's not the main problem. It's not the root problem. Because people can then say, okay, well, the logical solution might be, well, just wait. But the root cause problem might actually be you don't actually know what the right conditions are. So that might be a symptom to the root cause problem that you don't know what the right conditions actually are, if that makes sense. That's problems arise in trading as symptoms. They don't arise as the core problems itself. It's important to understand. I'm confused with a lot of information. It's just what to do. Write it down. Write it down. First, have an order in your head. So if you have a lot of information that you take in, the first thing is writing it down. Get it in the right order. Then we have, for example, foundational levels as the way we can turn things into a process, for example. So how we can order the information a little bit better, if that makes sense. All right, team. I'm going to end it here. Thank you, everyone, for being here. The MMT, by the way, has changed a little bit. So if you're interested in that, because, for example, the Lite also now has Zero to Hero module, which is a very good module in my opinion, one of the best. Masterclass has a lot of extra modules nowadays as well. Indicator, for example. So if you're interested in that, tradingmmt.com. If you do want more information, of course, or you have questions, always feel free to reach out to info@tradingmt.com right there as well. Thank you, everyone, for being here. Have a great day. Have a great rest of your Sunday. If it's already Monday for you, sleep well. Trade safe. Remember what we talked about right there as well. I think this is a very valuable live stream to go through again and again and again to understand what we talk about. Thank you, everyone. Have a great one.